Now, heading into the new year, we all like to make New Year's resolutions. Some may have goals oriented around fitness, health, mental health, wellness, as well as financial stability. Regardless of what your goals may be heading into the new year, we all want to accomplish those goals and look back at the year 2022 and think of it as a success. In order to accomplish some of these goals, we have to be very mindful and very smart about averting and dodging certain mistakes and not creating bad habits or behavior for ourselves that can leave us looking regretful at the end of this year. Averting certain common mistakes could be the big difference between you winning and losing this year. And today we're going to talk about 3 of the main investing mistakes to avoid in the year 2022. What's good, YouTube? It's your boy Campbell, and we're back with another video. Now, first and foremost, if this is your first time on my channel, I just want you to do me a quick and simple favor. Please hit that subscribe button as well as turn on that notification bell to be notified anytime that I drop some content. And while you're at it, please leave a like down below. It helps the algorithm, helps my channel continue to grow, and it pushes my content out in front of more and more people. And if this isn't your first time on my channel, I just want to say welcome back to the trenches. It's your boy Misha reporting live, and I got some great content for y'all today. Now, regardless of who you are or what your goals are, we want to make 2022 the absolute best year of our lives. If that's not your goal, then get off my channel. We are not entertaining being broke, complacent, lazy, or undisciplined this year. If you want to be any of those things, please do me a favor. It's a million other channels on YouTube to watch. Do not watch mine. We don't encourage that over here. I'm sorry y'all, I got a little distracted, I got a little off point, my fault. But to get back to the point, if we want to be successful this year, we need to avoid certain mistakes and certain bad decisions that could keep us from being successful. When it comes to investing, whether it be the stock market or crypto or even NFTs, there is absolutely no way to predict which way things are gonna go. Things could go left or things could go right. But we don't really know the trajectory of things, because if we did, we try to prevent things or we try to speed things up. Now, the first mistake you could possibly ever make is not preparing for a stock market crash. We don't really know what the stock market has in store for us in this upcoming year. Last year, the stock market kind of stayed the same throughout the pandemic, regardless of things going up or down or regardless of whatever happened with the economy. This year, there's a new variant to contend with, as well as just certain companies and businesses losing CEOs and losing important factors that come into play when we're talking about stocks. Either way, the outbreak of the economy will directly correlate and impact the stock market, and we have to anticipate a stock market crash. Now, that doesn't mean that you walk around scared and you're panicking and things of that nature, but it simply means that, hey, be prepared for a stock market crash so that when it does happen, you're not caught off guard. For example, a thing you could easily do is shore up an emergency fund. That way, if the stock markets do plummet, you won't be ravaging through your financial portfolio looking and scrapping for pieces because you've invested all of your funds into these stocks that have now plummeted and crashed. Also, make sure you're well diversified in your portfolio. You should have a mixture of a lot of different things. I've always said that. Don't have just one thing or another. It doesn't hurt to have a mixture of a lot of different things. If we want to be rich, 9 times out of 10, it's not going to happen just off one single strike of gold. No, it's going to happen from a lot of different sources of income, a lot of different investments that are all eventually going to come together and going to pay huge dividends. Market crashes can be viewed as a negative thing, but we have to view it in a positive light. If we have an emergency fund shored up when the market crashes, that's the perfect time to invest. Again, anytime the market crashes, that's the best time to invest because you get to buy in cheap and low. At the end of the day, how do you make more money? Having more stocks. How do you get more stocks? When the market crashes. You feel me? It makes sense now. The second investment mistake you could possibly make this year is overloading on crypto. Now, granted, this is coming from me. Y'all know me, the crypto king. I love crypto. I'm always telling y'all to invest in crypto. I believe crypto is the future. I believe crypto is the way. But that don't mean I want you to just invest all of your funds and your entire financial portfolio simply into crypto. You should have a mixture of investments. As we talked about in one of my former videos, crypto is highly volatile, meaning that it can fluctuate from a day-to-day, minute-to-minute, hour-to-hour basis, meaning it is so hard to track and predict. I don't recommend putting all of your eggs in one basket and just overloading on crypto. I don't think that's very smart, or I don't think that's very healthy as well. Now, I don't want you to take what I said too literal and make that cause you to believe that I'm saying to not invest in cryptocurrency. That's exactly what I'm not saying. I'm just saying that you should be able to do so while at the same time adding quality stocks or at least diversifying your portfolio so that you don't have just one type of crypto coin. I just don't want you to be too heavily invested in one coin or one form of investing and forget about the other forms of investments. Again, it's gonna take a collective effort from multiple different sources in order to become rich. We're not trying to do it overnight. We're not trying to do it with simply just one source. We don't ever want our income to be heavily dependent upon one sole factor. And the last mistake you should avoid is steering clear of real estate. Now, y'all know we talked about this in multiple videos. You might assume that, hey, Real estate is a bad investment if you have no desire to own, manage, or even possibly fix up certain homes and properties. And also facing the risks that come with it, such as repairs, different tenants, as well as certain state laws and property taxes. But just hear me out for a second. Branching out into real estate could actually be a good way to diversify your investing portfolio. Now you might be thinking, damn, Meech, which one is it? And one, you say is steer clear of real estate. The next, you're saying, hey, this might be a good way to diversify my portfolio. Which one is it? Real estate investment trusts are companies that own and operate different companies, whether it's malls, warehouses, data centers, or even stores. These investment trusts trade publicly on major exchanges, so it's pretty easy to track their share prices. To a large degree, these are a safer route instead of going the real estate route where you buy a property, you fix it up, you try to go out and sell it and have to manage it, repairs, do all that different stuff. This offers you more liquidity and it offers you a faster way to sell. They usually pay a much higher dividends than just regular stocks. That means it's easier to provide yourself with a steady source of income through this means of investing. So again, this isn't the typical real estate route which we've been talking about. Y'all know me, I'm not a huge fan of real estate investing. I'm just not at this point in my life. Maybe when I'm in my 30s or something like that, maybe one day I'll change my mind. But right now where I'm at in my life, I just don't consider myself ever going the real estate route or buying homes, fixing them up, maintaining properties and stuff like that. So I'm not gonna recommend you do something that I really just wouldn't do. Now granted, if you're watching these videos and you want to get into the real estate world, then by all means go for it. I'm just telling you personally. But if you're going the route of these investment trusts, then I think this is a great way to get into the real estate world without having to be so hands-on, and also giving yourself a way to sell and just be able to track the progress of it on the major trading public scale. All in all, if your goal is to become a better investor in the year of 2022, you ultimately have to prepare for a crash. You also have to tread lightly on crypto and consider branching out into this form of the real estate world. Those small factors could be the huge difference between being a successful investor or just being an average investor or even being below average. At the end of the day, every goal we have this year, we've said it before, we're trying to absolutely obliterate. And it doesn't hurt to just start thinking in a different way and start opening our minds up to different avenues and different ways to reach our financial based goals. And that wraps up today's video. If you found this video educational, informative, or entertaining in any way, shape, or form, do me a quick and simple favor. Please hit that subscribe button as well as turn on that notification bell to be notified anytime that I drop some content. And while you're at it, please leave a like down below. It helps the algorithm, it helps my channel continue to grow, and it pushes my content out for the more and more people. With that being said, I just want to say I thank y'all. I appreciate y'all. I love those who love me. I continue to thank y'all for so much love and so much support. And I'm going to catch y'all back at the next video.